Hello guys, my name is Jerry Flex. Welcome to the channel. Today we're going to be talking about retail investors versus Wall Street and the short squeeze fiasco. Please don't forget to like, share, and subscribe. At this point in time, I'm sure you're familiar with the Wall Street Robinhood short squeeze fiasco involving retail investors on Wall Street Bets, a forum on Reddit. But just as a short recap, on Wednesday of last week, for the first time ever, David B. Goliath, retail investors almost drove rich hedge fund managers bankrupt by shooting up the price of GameStop, which was heavily shorted by billionaire investors. When you short a stock, you expect it to go down, and that's how you make money. If the stock goes up, you lose money, and if it skyrockets, you're forced to buy the stock in order to prevent further losses by covering your position. Not only that, but you're still on the hook if you bought stocks with margin, meaning you borrow money. So you have to pay that back plus interest in addition to the difference between what you borrowed and how much the stock went up by. For example, let's say you borrow $100 to short a stock of the same price and the stock goes up to $200. In that case, you lose all your money because the stock went up by the same amount you borrowed. And when you short a stock, you lose money if it goes up. If it had gone up to $110, you only lose $10. But if it goes up to $200, you lose $100. If it went up to $300, then you'd owe an additional $100. And if it went up by $400, you'd be on the hook for $200 in addition to the first $100 you borrowed to short the stock plus interest. By the way, this can go on to infinity. And now you can picture why hedge funds were in so much trouble. According to Business Insider, the big boys in Wall Street lost north of $19 billion. But yeah, power to the players. That's a lot of money. So now you can tell why they're pissed off at the little guy. But the issue here is what Robinhood and other brokerages like Webull and E-Trade did in response. They restricted trade of the stock, allowing investors only to sell the stock but not buy it, all while the big hedge fund managers were allowed to trade the same stock without any restrictions. That's what's unfair. And that's why Robinhood is getting sued in federal court as we speak. Robinhood cited liquidity concerns as the reasoning, meaning that they were scared to not be able to pay investors all their money in case they wanted to sell the stock. And to be fair, that is a valid reason. The stock was extremely high, there were more GameStop shares shorted than there were even available for purchase, and the market maker, Citadel, the entity that actually holds the stock, Robinhood just being a middleman, and even Robinhood, could have both gone bankrupt. Not only that, Robinhood is contractually obligated to make sure these sort of liquidity issues don't occur, in accordance to SEC rules. But interestingly enough, they're also legally obligated to ensure investors get the best available price for a stock. So what gives? Now the question becomes, why didn't Robinhood and the other brokerages stop all trading of the stock, sell, buy, etc., and only allow for the sale of the stock? Allowing only the sale of the stock would make it crash and lose value, which would make the little guy, the retail investor, you and me, lose money. Remember that they are legally supposed to make sure you get the best price for a stock? Why not stop all parties from freely trading this stock if controlling volatility was the goal? Why only let the rich be able to buy and sell the stock? That's the problem, and they still haven't answered that question. On the bright side, everyone from legislators like Elizabeth Warren, Alexandria Ocasio-Cortez, and even Ted Cruz of all people, to celebrities like Ja Rule and late-night show hosts like Stephen Colbert chimed in support of the retail investors. So we're not alone. Wall Street is already fighting back, claiming that Main Street, us, the little guy, the retail investors, are a threat to the whole system. They're already thinking of legislation to rig the market even more and prevent us from winning again. And they're right. We are a threat to the system. We're happy to be a threat to a system riddled with injustice which has oppressed the little guy from day one. Listen, I'm a capitalist, I like money, and I believe in free enterprise. But the problem is that said enterprise has never truly been free. The rich win every day, all day for decades, since the money game was started. We win one day, and it's an issue. The rich have been moving the markets for years, and politicians have done nothing of substance about it. It's about time the little guys band together to reap the profits of this very rich country we call America. If the rich are worried that we're going to destroy the market and drive them out of business, then they just need to get more creative. They should call their Harvard and MIT educated statisticians and mathematicians to do better stock computer modeling to protect themselves against such events. They have all these supercomputers, capital, and resources that we'll never have access to. Wall Street shouldn't be allowed to take away our freedom of speech to communicate and teach each other how to make money in the stock market. They have their tools and we have ours. Unity. I hope this becomes a movement to finally achieve economic justice in America. Most of the wealth of the country shouldn't be concentrated in the hands of an elite 1%. Power to the people, long live Wall Street bets, long live the little guy. Like and subscribe, Joyflex out.